Hey friends, Andy here from the Your Friend Andy YouTube channel. Welcome to the podcast. Today on the podcast, I have Joe. On Twitter, he goes by Joe, financially savvy. And I guess we'll see just how financially savvy he really is. 6 years ago, his net worth was negative $40,000, no savings, no investments, and now his net worth is nearly $300K. And Joe just quit his 9-to-5 job at the age of 32 to do this whole online business thing. So maybe he is actually financially savvy. There's a ton to talk about here and break down. So thank you, Joe, for being on the podcast, and welcome.
Thanks, man. Thanks for having me. Yeah, I'm excited to do this. This is like one of the first podcasts I've been on. So yeah, I'm really excited to be here and share my story and hopefully inspire some people to kind of do similar things, achieve similar things. Yeah, thanks for having me.
Oh, of course. Well, yeah, you do have a very inspiring story. I definitely want to talk about some of that stuff. I love that you're sharing your story. There is some similarities between what I've done in my life and what you've done, so I definitely want to talk about some of that stuff. But first, a quick word from this episode's sponsor. If you're like me, then you're either a small business owner or you would like to start your own business one day. And when you do that, you're going to need a banking solution that's truly built just for your business. That means no fees, no minimum balances, and no bookkeeping problems when tax season rolls around, because why would you want to make tax season even less fun? That's where Relay comes in. Relay is an online banking and money management platform that's a perfect fit for small businesses and one I recommend. Again, Relay has no account fees, no overdraft fees, and no minimum balances, which means you get to keep more in your pocket. One of my favorite features is that you can get up to 20 individual accounts, including 2 savings accounts, to organize and allocate income for things like day-to-day expenses, investments, or taxes. You can now earn up to 3% APY on savings with Relay savings accounts. You can create virtual and physical debit cards for you and your employees in seconds. And best of all, Relay makes your bookkeeping speedy and meticulous by giving you ultra-detailed transaction data and directly syncing it back to QuickBooks Online and Xero. And so many more amazing features I don't have time to tell you about here. Really, they do a lot. It only takes 10 minutes to apply for a free Relay account, and you can do it online at relayfi.com/yourfriendandy. Again, that is relayfi.com/yourfriendandy. Okay, let's jump into this episode. So where to start? And I think the place I have to start is a little nugget I uncovered that is blowing my mind a little bit, and I want to talk more about this. You have a degree in forensic and crime scene science.
Yes.
That's super cool. Why did you get into that? Tell me a little bit about that before we jump into the rest of this.
Wow, I wasn't expecting that. Okay, right. So this is maybe an interesting story. I don't know. But basically, when I was, just graduated like high school in the UK, so the age of like 16, 17, I was going into college, and at that age you're being asked, what do you want to do for the rest of your life? And I'm thinking, oh man, I don't know. And I thought, okay, well, looking at my grades and things at that age, I was like, well, my the counselors and things at the school were like, you're really good at English, you're really good at maths, but science is probably your weakest area. And I was like, yeah, but that's why I like it, because I want to be better. I want to learn more about this. I want to be better at science. And basically decided to, instead of doing what we call A levels in the UK, which would be studying, chemistry and biology and things like that, I studied like a BTEC, which is more of like they call it easier, but it's just like a lot of coursework and no exams. And it was literally, every term we would have like 4 to 6 assignments to write on different topics, and that's where my kind of strength was. I am terrible at exams and really good at writing coursework. Anyway, long story short, I decided to do a BTEC in forensic science because I was really into CSI, right?
Nice.
Who's with me? Yeah. So, and I was like, this looks like a very, they glorify it a lot. It's not anything like it is in reality. And that basically led me down the route of, forensic science. Really, really enjoyed it. I've always been like big into science and wanting to, like I said, kind of better my knowledge in the area. And then, the college course near me had just opened a BTEC on the subject. So I went to university and studied forensic and crime scene science there at Bournemouth. And Unfortunately, so the whole career plan was to get a job at basically the Forensic Science Institute in the UK, which is like publicly run, right, government funded forensic science lab for all the crime scene investigations and things like that. In my second year of university, the government shut it down completely. So like the 300 people that are enrolled on my course that year, who are all expecting to get jobs there, were like, huh, well, that kind of throws that idea out the window. And then it all went private. And basically, all of the private labs for forensics are in like the big cities like London and Birmingham and Manchester, because that's basically where any kind of major crime happens. And there was nothing kind of in the south where I was based. So, yeah, long story short, that's how I ended up with a degree in forensic science.
Well, that's super. I mean, I feel like that's a fascinating subject. Now, here's a weird question: has any of the stuff that you learned, or that becoming a educated expert in this field, has that helped you at all with like the finance stuff? Like, is there any crossover whatsoever between the two things?
I think only in that it made me super analytical about things. Like the finer
Mm,
details really mattered.
yeah.
But that's probably about as far as it goes, to be honest. Because I think the part of the driver behind wanting to do science was because I thought, well, if I get my degree and I get like a master's and things, I never ended up going that far, but I got my degree, and I thought, if I go further than that, become like a lab manager or like a research, professor or something like that, the money's got to be great, right? I'm going to be making bank. I'll be set for life. Not the case. So I quickly learned that unless you're like, like a 1 in a million kind of genius, and you're like, frontline, you know, super like innovative kind of scientific research, that actually the money's not that great. And if you are in that kind of position, then you're working all kinds of hours under the sun. You've got all of these pressures on you from like investors and like the institution you're working for, like big pharma, right? To produce or publish or something like that. And it just didn't seem like the kind of career that I wanted.
Mm,
And that was part of the reason that kind of spurred me into wanting to escape that side of things and focus on something else.
yeah. So you're telling me you're not secretly Sherlock Holmes?
Unfortunately, not.
Okay, that's fine. So I want to jump in here to something I was reading on your site. I'm actually going to kind of read this verbatim, but you kind of set out a mission statement, which I thought this was really interesting. Joe's mission is to provide you the tools, education, and mindset you need to eliminate your debt in the paycheck to paycheck cycle and retire early, no matter what your current circumstances, income, or age. So there's a lot of things to break down there, but like,
Mm.
tell me, how did that come about? Like, what inspired that? Why is that your mission statement?
Yeah, I mean, it's because it's what I managed to do for myself, and what seemed like an impossible task when I first started. I want to say maybe not quickly, but faster than I thought, became very possible, and I was able to make it happen. And it's simply through the fact that I just decided to put the time and effort into educating myself about the tools and the resources and the processes and the systems and things that I've used to do it, that I realized that none of this stuff was taught to me when I needed it earlier in life, to avoid me getting into the kind of mess or the situation I was in the first place. So yeah, I just thought, more people need to know about this. And that kind of got me, initially writing my blog. That led me to Twitter, and then that led me to, producing resources and things for people who I realized also needed help. So that's my mission now, is I want to help as many people as possible, no matter where they are in their stage of life, because it's no one's fault, right? No, it's not our fault that we're not taught this early enough in life when we should be. So whether you're starting this at 20 or 55, right, or even beyond that, it's not your fault that you don't know necessarily the best way to manage your finances, or the best way to invest, or the best way to eliminate your debts, because you've never been taught properly unless you've looked into it yourself. So that's why that's my mission statement.
Just imagine what like super geniuses we would all be if we were taught that stuff super early, and we actually, I mean, a lot of us, I can speak for myself, I definitely would have been like, whatever, if they did try to teach me that. But if we actually could glean the information, and then if we actually put it into practice at like age 18 or something, Like that would be wild.
It would be unbelievable, but I'm totally on the same page as you. I say this to people. I speak to a lot of people every day, and I always say, it's not your fault. We weren't taught this stuff when we should be. However, I think looking back at 18-year-old me, if someone tried to tell me that I should be investing 20% plus of my income, and I would be like, huh? Whatever, man. I want to go drinking and party and all of this kind of stuff. So. But yeah.
So when you first were starting this like journey of financial education stuff, and you were educating yourself, what were the first places you turned to educate yourself?
Yeah, great question. So I should start with like the thing that kind of triggered me into doing this was I was like 2 years into my first like proper job. I was like 25, and my workplace pension provider provided us we'd just changed providers at the time, and they sent everyone like a report based on what they were contributing now, with some terrible calculation that just terrifies people, and telling me that I was on track to retire at the age of 82 if I continued contributing what I was into my pension at the time. I won't get into like the math of how they figured that out. It was wrong to begin with, but not knowing anything, as with most people who pay into a workplace pension plan, I was like, whoa. This is not okay. Like, members of my family who were retired, they were on like final salary pensions. They had like convertibles. They were fine. And I was like, so how's this possible? And then, I had a meeting with the advisor at the company from the pension provider, and he was like, yeah, you should be working towards, like a 20% contribution to your pension by the time you're probably like 28, 29. And at 25, 26-year-old me was thinking, okay, well, I'm still renting. I haven't bought a house yet. I want to get engaged. I want to get married. We want to buy a house. We want to start a family. Like, my life isn't getting any cheaper anytime soon. How am I meant? And I already don't have any spare money. So what's the deal here? So that sent me on like a journey of basically self-discovery and research to try and figure out what on earth I was going to do. I was looking into investing, but at the same time, I was like, I don't have any money to invest. So I'd try putting money into an account and then be like, actually, I need that. I'm going to have to take that back out. I was doing like all the wrong things. And then so by this point, we had actually bought our house, and I was still trying to figure everything out. Hadn't really made any progress. And I was decorating what would become my daughter's nursery. And I'd never actually listened to a podcast at the time. This was like 4 years ago now, so hopefully you can forgive me. But I was like, I'm going to try and find like a finance podcast, because maybe it'll help. And I came across the Choose FI podcast. Hope you don't mind me kind of mentioning that, but that basically, introduced me to all of these, like rules, like the 4% rule and index funds and budgeting and expense trackers and all of these just general foundational principles of just sound financial management and personal like finance planning. And my mind was just blown, and I just didn't stop listening to that podcast, like commuting to work, commuting to like trainings with work. Like whenever I had a spare minute where I was like in the car or I was at home and wasn't around people, headphones in, and I was listening to that, and I was learning, because they had like guests on there that were helping, provide information and stuff. And then, funnily enough, a colleague of mine at the time, was looking in, and I was kind of early in this journey of listening to this podcast. A colleague of mine was talking about overpaying on his mortgage. And I just suddenly started kind of reeling off all of these other options. Oh, you should consider what your interest rate is, because maybe you're actually better off saving that into like this type of account, or maybe if it's a longer term, putting it into a fund, etc., etc., etc. And then like overpaying in a lump sum later on, maybe, all of these kind of options. And he was like, you should like write a blog or something, man, because I've never heard of any of this stuff. Pre-COVID me thought, I don't really have the time for that. Then COVID happened, and I thought, I'm going to start that blog. And then, as I kind of mentioned earlier, that blog led to Twitter. Twitter led to, I kind of quickly realized that Twitter was a much better platform for getting a lot of information out in like a short space of time. Like it's like immediate, and it's easier to kind of grow an audience versus a blog, I quickly realized. And then also the monetization side of it, which helped me kind of, at the time I was just kind of like, oh, maybe this will supplement my income and help me just retire a bit earlier one day. And then that income essentially ended up replacing my 9 to 5. And funnily enough, the guy who told me to start that blog at the time that I handed my notice in was my manager.
Nice.
Yeah.
So you can be like, this is because of you. You did
Literally,
this.
yeah.
So only blame yourself.
Yeah, pretty much.
Okay, that's super cool. Okay, that's a lot of stuff. Yeah, on my list of things I had seen on Twitter, you'd mentioned that that kind of thing sent to you about, oh, you're on track to retire by 82. So that sounds like that was that your epiphany moment? Was that your like aha moment?
Yeah, pretty much. That was like the aha, like this is not okay. I need to do something about this. However, I'm clueless. So, it stuck with me, but it took me actually like another probably year or two before I actually put any kind of real action into place and started doing something, because I was just kind of taken back by this, just thinking, well, what do I do about that? Kind of like, I'm not educated on how to deal with this. So until I learned that and I discovered that podcast and figured out, all of these new things, that basically took me until then before I really kind of started making any progress.
So aside from the podcast, which that's a great place to start, it sounds like, I'm assuming there's also probably some books you read in the process too. Is that part of the journey?
Yeah, definitely. So The Simple Path to Wealth was the first book that I read on kind of anything like personal finance and like growth and investing and things like that, by J.L. Collins. That kind of and I found through the podcast, and that kind of really kickstarted it, because it was kind of like listening to all of these people was great, but obviously they were all talking about their individual circumstances. They had kind of general rules and principles that you could follow, but having a book that was like this is like a step by step. This is kind of what anyone can follow to achieve like like an early retirement and having sound finances and things. So that was the one that really kind of stood out to me in terms of the influence it had over my where I've ended up.
Very cool. Are there any other books that you would recommend to somebody who's just kind of starting on their journey?
So another one I read, which might be helpful actually specifically for people in the UK, is called Reset. And I can't off the top of my head remember the author now, unfortunately, but it's like a yellow book with a big red reset button in the middle of it. So if you Amazon it, it'll probably come up. So that was one that I found was really helpful, because like he was like specifically from the UK, and something I was struggling with was all of this information around personal finance and investing and index funds and ETFs, and everything was US centric. And I was like, what are the damn UK versions of this stuff? So that book really helped. And that was another thing that I was like, maybe I do need to start writing about this, because I can't find anyone else in the UK right now who's writing about this stuff. So it was kind of like, firstly started with me kind of tracking my own journey of figuring this stuff out. Then once I'd figured it out, it was like, right, here's what you guys need to do.
Yeah. So not only is the, country specific aspects of personal finance confusing and overwhelming, but just even when you dive into your country specific kind of stuff, that's just overwhelming. So like what would you say to somebody who is starting this journey, and they're trying to dive in, but it's just information overload? It's like opening all taps, it's just blasting them with all this information. How do you kind of decipher that? How do you take baby steps into that? What would you recommend?
In terms of like making progress towards like trying to achieve their goals, you mean?
Sure, or just like learning the basics, like just understanding even what these things are. What is budget? What are like? How do you like understand all these concepts? How do you kind of baby step your into way to understanding the fundamentals of personal finance, and then how they might affect you, and then what you can actually do to like do those things?
Yeah, I would just say try and just keep it as simple as possible to begin with, right? So, do definitely like read some books, but eventually you've got to stop reading and actually start taking action. There's hundreds of books on personal finance that you could read. Once you've read probably 3 of them, you've pretty much covered like 98% of your bases. There's a few nuances between them, which make some methods like, maybe like more interesting than others to your specific situation. But for the most part, once you've read 3, you've pretty much got it covered. Read maybe 3 or 4 books, and then just start taking action. Find what kind of speaks to you, like the most, like the methods that kind of speak to you, and go with that. Because there's yeah, one of the problems with social media is people are like, use this budgeting method and this budgeting method and this rule and this tool and everything like that. So just it's going to be a bit of trial and error at first, honestly. But what kind of appealed to me was like building it all kind of like myself. So like I could download a free tool, but there was things in it that I didn't really like the look of and the way it worked and things like that. So I was like, I'm just going to build something really simple that just works for me and is very, very easy to use and can be customized by whoever else wants to use it. So yeah, I would just say, yeah, read a couple of books to begin with, just to kind of find your feet with like the general principles, then actually just start taking action. The first thing you really need to do is understand where you are right now, like what your current state is, to really understand in detail like where you're at. And it's, for some people, it's quite a hard thing to face. Obviously, like diving into like what your debts are as a total and like how much or little savings you might have and how bad your spending habits are, right? They're difficult things to kind of confront yourself with. But it's so critical. Unless you do that, like anything else you do after that is not going to be optimized. You're going to hit roadblocks and hurdles because you haven't just addressed that, building that kind of initial foundation. So really kind of understand where you are, look back over your finances for the last few months, put it all into a spreadsheet, whatever one you're using, and really kind of get to grips with where you are from that point. And then it's like baby steps, just take some action every day to keep that updated, start budgeting, just kind of building on your foundation of good financial kind of management day by day.
Since you have, I'm sure, read quite a few personal finance books, I know I have. You said you could kind of you read two or three, and the general idea of what they're all trying to talk about. I would agree with that. So based on that experience, what would you say are the 2 to 5 things that are kind of universals in the world of personal finance, according to all these books, that you think is actually good stuff?
Ooh, good question. Okay, so I'd say budgeting, I feel like a broken record sometimes, and I'm sure people have like unfollowed me because I talk about budgeting so much and they just don't want to do it. But definitely budgeting. Like if you don't have a budget, your finances aren't optimized. You need a budget in order to figure out how much free money you have every month, like your free cash flow, to put towards achieving your goals. If you're not working that out, you're either not saving as much as you could be, or you're going to try and oversave and then leave yourself short and end up going into debt and those kind of things. So definitely budgeting is one of the kind of definitely the key principle, I think, that would be common across all of them. Probably like the 4% rule is pretty much like recognized across the board. There's a couple of people who dispute it and things like that, but for the most part, I'd say that's one of the main rule, right, that people lean on to build their retirement plans and things like that.
And could you very, very briefly explain that?
Yeah, sure. So the 4% rule is, so the 4% rule is if you take your yearly expenses or your estimated yearly expenses in retirement or once you want to stop working, multiply it by 25, that's your FI number, and it gives you a safe kind of withdrawal rate of 4% that basically covers your yearly expenses and means you will never run out of money, based on the study called the Trinity Studies. And it's based on an 80-20 portfolio of 80% equities and 20% bonds. And I think in something like 98% of instances over like a 40-year period they look back on over the market, in all of those instances, in 98% of those instances, the people never actually ran out of money. They ended up with a lot more than they initially started with. So it basically is kind of like a safe withdrawal rate, they call it, to ensure that you can retire and never run out of money.
Got it.
Yeah. So yeah, I'd say budgeting, the 4% rule, an emergency fund. Definitely, I think that's kind of recognized across the board. Debt being the absolute devil. And I know a lot of people kind of jump on that and be like, oh, well, yeah, you can leverage debt. Yeah, blah, blah, blah. Like, yeah, you can. If you're good at it and you know what you're doing and you've got something you can you like leverage it like well in terms of like real estate and things like that, completely accept that, right? But consumer debt, avoid it like the plague as much as you can, because it's just a cash flow killer. And like I mentioned, it will eat into what you've got available every month and hold you back from achieving your goals. I think one that is maybe kind of that I've kind of picked up across all of the books that maybe isn't spoken about so much is attacking a specific goal with like absolute, I don't know whether the right term is like velocity, right? Before trying to do something else. So some of the people that I work with, for example, they'll be like, they want to invest. Totally understand. They've got debts that they want to pay off. They also know they need an emergency fund. They've got like, some other financial goals, whatever it is in the background as well. They want to buy a house, and they're trying to save for all of those things and invest and pay off their debts all in one go. But they're not making any progress with any one of them fast enough to give them that kind of visual confirmation that the hard work they're putting in is actually paying off and getting them somewhere. So one thing I really I picked up quite early on was like, you need to focus on something you can do immediately, channel as much of your, free cash flow, whatever it is, into, and your energy into achieving that one thing. Absolutely, crush that goal and then move on to the next, because you'll make a lot of progress quickly. Generally, it works out better as well financially for the most part, and then move on to the next one. So I'd say, yeah, those were those. I think that was 4. Yeah.
Yeah, that's great. Okay, I really like that last one too. Yeah, when I first learned about the 4% rule, I kind of blew my mind that this idea, if you're looking at the S&P 500, for example, over its entire history, it's, depending on what source you're looking at, somewhere between 8 to 10% lifetime, year over year. And the idea is, you take that 4%, you're still earning 4% that year or whatever. It's not perfect. You should not base all of your financial decisions off of it. It's a great tool or a great way to look at it. But it was just it was kind of a mind opener for me, this idea that, I could draw from these things I'm building up and they still grow. That's pretty cool.
Yeah.
So yeah, I'm really excited you talked about that. So let's backtrack a second. You're talking about debt and in leveraging debt. I also believe that most people probably should not try to leverage debt and stuff. And it's some people can do it, but most average people probably shouldn't. It's kind of they're gonna get burned. But earlier you talked about this whole mortgage thing, and we're both on Twitter and in finance Twitter. The mortgage debate is a real thing, and there's the question: if I have a low interest mortgage, do I pay it off? Do I invest? Where does Joe sit on that fence?
Oh man, you're pulling me into a fierce debate here.
So this will be posted, the clip on finance Twitter.
Cue the unfollows. So my opinion is, right, so when I always talk to people, my clients, whoever it is, about this kind of debate and whether they should overpay on their mortgage versus invest, I always say, right, mathematically, looking purely at the maths, based on most people's situation, let's face it, it makes sense to invest rather than overpay your mortgage. If you're going to be investing, that is, consistently in low-cost index funds, things that aren't going to, fluctuate too much and could end up, if you don't know what you're doing, resulting in a lower return than you'd get from those kind of investments. So if you're going to do that, yes, mathematically it makes sense. But there is this whole other kind of psychological side to the equation of carrying a huge debt, such as a mortgage. It does weigh down on you, whether you kind of realize it or not. Some people maybe more than others. But ultimately, it does have a psychological bearing carrying a debt of hundreds or, over 100 or a few £100,000 or dollars. So you've kind of got to weigh up what ultimately helps you sleep better at night. If you're very kind of numbers driven and kind of more analytical like me, then you'd look at that and think, okay, mathematically it makes more sense. I'll be better off if I actually save and invest over the period of my mortgage, and earn, 8 to 12%, whatever it ends up being, per year, rather than overpaying on a mortgage, which I'm currently, for myself personally, paying 1.89% interest on, because we're very lucky and we fixed early.
Nice.
Yeah, right. Very happy with that decision. So, however, what I'm personally doing, even though I am analytical and very numbers driven, is I am planning to invest whilst also just overpaying enough so that by the time I reach my FI number, so that number that will allow me to retire early, that I won't any longer have a mortgage, so that it's not an expense that can suddenly change drastically with a change in interest rates. Because I think that's a risk and something I don't want to have like in the back of my mind once I've hit that FI number and I'm not any longer like working much or if at all. So I know that's not like a clear answer, maybe not what you wanted, but yes, it makes more sense mathematically to invest rather than overpay. However, there is a psychological side of things, and I'm going for something down the middle.
Nice balanced approach.
Yes.
So do you think like that's all those things you said are very interesting. Do you think the amount of money you make has a big bearing on how you make decisions like that? For example, someone who's earlier in their journey and maybe they're only investing, they have $500 or $1,000 per month. That is extra that they could invest or they could pay down their mortgage with. It's an either or they split in half and 250 each, to place, but $250 to each one, is that really making that much of a difference versus a person who's making 30, 50, $100,000 a month? Like, what do you see as the difference there? Like, how much more is a psychological element of that play in either of those scenarios, I guess?
Yeah, that's a really great question. So I would say, yeah, in that situation, what I would do is I would invest rather than overpay, because I've got kind of much further ahead of me, and like I got a lot more time ahead of me to both, I can spread that mortgage out over longer to give me kind of more available cash flow to invest right now. And on top of that, I'm going to be earlier in my career growth and earnings growth journey. So eventually I might get to a point where, 10, 15 years down the line, I've got a lot more disposable income that I can then think about putting towards like a mortgage overpayment, as well as maintaining my investments. So yeah, I'd say at that point in your journey, yeah, it makes sense to early on to invest rather than overpay.
Yeah, I like that. I feel like the more I've thought about, this quandary amongst all the other ones and stuff, I feel like the aspect of peace of mind, once upon a time I used to kind of dismiss like you're paying all this money for peace of mind. It could be costing you thousands or hundreds of thousands of dollars in the future. Think, be analytical, like this, but at the same time, the more money you make and stuff, the more, I guess, the peace of mind argument makes sense to me. It's like, if you're investing tens of thousands of dollars per month and you can also overpay and like pay off your mortgage at the same time super fast, like, should we quibble about this type of stuff? Maybe that makes a lot of sense for those types of people. I don't know. It's something I thought about.
Yeah, that's like I mentioned, my reasoning behind having an overpayment plan that just lines up with when I will hit FI makes sense to me, because like I mentioned, it's a debt I won't any longer have when I've got like a fixed income that is going to pretty much stay the same, give or take 2% inflation, right, thereabouts, throughout my like retirement. And therefore, if I've got like a mortgage debt that could fluctuate from 2 to 6%, but in the space of like 2 years or less, right, like we've seen, that's going to have a huge impact on my available income. So that gives me that kind of peace of mind, like you mentioned, whilst also enabling me to invest as much as possible. Because I'm not like trying to overpay the mortgage as soon as possible to get it gone ASAP. It's just, so long as it lines up with when I hit FI, then I'm good.
You keep saying FI, which stands for financial independence for those who don't know. So are you a FIRE guy? Are you just an FI guy? Like, what do you actually want to achieve? Do you want to stop working at some point and just live off of the your retirement money earlier than planned? Like, walk me through that.
Yeah, so I kind of flip-flop a little bit, because I feel like one thing I'm learning is that I am constantly in motion. I feel like I need to constantly be in motion, like doing something, working on something, or helping someone in order to just feel fulfilled, I think. Um, so I think as much as I say, I will hit fire and I won't have to work, it's more about like, I won't have to work if I don't want to, but I may choose because I have my social media and things like that, which I'll continue to build because it's something I enjoy. So I will always be able to make some money on the side if I want to as well. But it's kind of nice to know that I'll be in a position where I could be like, right, I actually don't need to work for 3 months and I can just do some traveling kind of thing. So again, yeah, I'm not completely clear cut, but I suppose more on the fire side, like wanting to be able to put myself into that position as early as possible to not have to be like, to not have to come to work and have to be on social media in order to cover my bills, but doing it because it's something I enjoy and knowing I can help people.
Yeah, I like that a lot. I'm kind of the same way. I want to have enough money that like fu money that if I decide I don't want to do anything and I just want to sit on my ass all day or something, I could, or I'll continue doing things that interest me and then take big breaks or vacations or whatever. That's the beautiful thing about the FI in the fire, financial independence. You are independent because of the financial decisions you've made. It's kind of this beautiful thing. So
Absolutely.
talking about people who are just starting out, a temptation for a lot of people is to like, oh, I gotta, I don't know anything about this. I have to get a professional to help me. I need a financial advisor. And I'm somebody, and I can give my full views on this or whatever, but I like the idea of one for sure. When they're like flat fee or kind of on a certain basis. Now, in your opinion, is hiring a financial advisor, especially for a newer person who's not had much money in the first place and they're starting out, is hiring a financial advisor who takes a yearly percentage, is that like a giant scam?
Man, you're throwing me in it again. I think giant scams may be strong, but
Strong words.
yeah, no, I don't know, man. I think it's tricky because having been in that position of like knowing I needed to do something but having no idea what to do, there's a comfort in knowing that you can pay someone to just manage it all for you and to not have to worry about it. However, often when you're in that position I was in, you also can't afford a financial advisor. So you're kind of forced to figure it out for yourself. And knowing what I know now about it and how not easy, but how simple it is to kind of set these things up for yourself and put yourself in a position where you essentially don't need a financial advisor, then yeah, I think there is an element of it that is, it's they provide a service that people feel they need, but I think if people realized how simple it was, they wouldn't do it. I've literally worked with people who were paying a financial advisor who was taking their money and investing it in a Vanguard ETF for them. Like, and they were charging a 2% management fee a year. And I was just like,
Wild. Hate that.
don't do this, please. You need to fire them. The other problem is often they form really good relationships with these advisors, or the advisors form good relationships with them. So then they feel guilty about the fact that they could do it themselves, but then they'll have to tell them they don't need their business anymore. So yeah, it can, when you know what like we know and other people in the community know, you want to, yeah, it feels like a giant scam. But it's tricky.
So, what do you say to somebody who is considering that and they go, "Oh, it's only 1% a year. It's only 2% a year. That's hardly anything." Like, what would you say to that person?
I would say 1% or 2% may not sound like much, but over the course of your investing like lifetime, it's a huge amount of money. I don't have any of the figures in front of me right now to tell you what it is, but I think something like a 0.75% fee, I think works out to I think it was like a 20% smaller pot over a 30-year time frame. I have to like double check
Oof.
those maths, but that maths, but that's a huge amount of money. So, and then when it's something that you can very easily set up yourself with the accessibility we have now to the internet and Vanguard and other kind of providers of this kind of things, it's a no-brainer. You're going to take maybe an hour out of your day and you can set up your own whatever it is based on where you are in the world, whether it's a SIP in the UK or a 401k or a IRA or whatever it is in the US, you can set those things up with these kind of providers and pay like 0.02% rather than 1%. And when you kind of put it like that, they're like, okay. And that's the other thing with the advisors as well. I think they served a purpose a long time ago when people didn't have the accessibility that we have now, right? So they were the people who had access to these institutions and could, they could access the stock market, and it wasn't as easy for us. You would have to like write a letter to them and wait days and things like that to execute a buy or whatever it was. That they served a purpose then, I think, but right now with how easy it is to, within a few clicks of a button, to set up an account and be investing in the biggest companies in the world, they're not necessary anymore. Let's face it.
Yeah, it's kind of unbelievable. Like over the course of your entire investing lifetime, that 1 or 2% can be equivalent to hundreds of thousands of dollars, or if not millions of dollars, of your money that you're giving to somebody else for. It sounds like we both agree. Most people can probably, if not, unless have crazy finances, you can probably do it yourself.
Yeah,
and that's a huge amount of your livelihood in the future that you're giving up for very little reason. So yeah, I wish there was more awareness of that. There's so many great financial advisors who charge flat fees or do certain other ways. You pay per visit, and they're actually really helpful. They help you set up things and break down concepts. But unless you have like overly complicated investments, most people shouldn't be paying on scale or whatever they call it, especially if you're just investing in the S&P 500 in your retirement accounts and stuff. Is like, that's no-brainer stuff these days. We have so many tools, apps, brokerages that make it so easy to do this on your own.
absolutely.
It's wild. So I want to now switch topics a little bit. I want to go back. I talked about you quitting your job, so I want to talk about that. How long have you been working your current job have you actually quit? Before I start, have you actually quit it? Is it over?
It's over, man. It's over. I am in week one. I'm in week one.
Congratulations, man. That is too cool.
Yeah. I'm very happy.
So how long did you do that job?
I did that job for 8.5 years.
Wow.
Yeah.
And then how long in that 8.5 years were you thinking about quitting?
It had crossed my mind kind of in the last 2 years or so, since I was like on social media and I started making some money, and then I'd have really good months and I think, man, if I did this full time, not just like on the side, what could I do with this? But I was like, well, I've got to also think about all of the benefits and my workplace pension contribution that they make and the health insurance and all of this other kind of stuff. So I was like, I'm probably just gonna stay here for as long as I can. It was a great job, and I was being paid really well, I think, for the money for the job I was doing. But I think it didn't really kick in until I went to my manager to ask if I could have some temporary flexibility in my working hours. To be specific, okay, I was asking to have Friday off every week, which sounds like a huge ask, but I would work an extra hour and a half Monday to Thursday, so my actual contract was only going to reduce by around like 2.5 hours, because I would work a shorter day Friday anyway, like the whole company did. And so I said, that basically means that I'll be able to not work Fridays and I'll be able to look after my daughter. And it means that my wife, who had just been offered a new job, would be able to accept the job because they needed her to work like Tuesday, Wednesday, and Friday. No, Monday to Wednesday and Friday. And if they didn't give me that flexibility, it meant she couldn't accept that job. So I was like, well, I'm asking this because it shouldn't always be my wife whose career has to suffer because we have a child and we need childcare, and childcare in the UK, and I think in the US as well, is extortionate. And we have like no like parental help when it comes to childcare either, unfortunately, on both sides. So we were like screwed. And they said no. And I went back to them and kind of tested it and was like, this is only for the next 18 months until she starts school. Then she's there Monday to Friday anyway, and I don't need this. It's fine. Like, I'm going to work extra hours Monday to Thursday, and on a Friday, I'll have my phone with me. So, if worst comes to worst, someone needs an update on one of my projects on a Friday, I can be there and I can answer that question. Which, by the way, no one has ever done. No one's ever phoned me on a Friday because everyone on a Friday is like, it's nearly the weekend, going home soon. So
Yep. Hmm.
yeah, long story short, they said no. I argued it, and I left a meeting that we had kind of in person, just thinking, that's it. That's it now. Like, they don't know what I've been building on the side for the last kind of 2.5 years, and they obviously they don't, right? So I'm just gonna have to take a huge leap, kind of invest in myself and this business that I've built, and see what I can do with it to see if I can escape that. So I made some big moves. Invested massively in like the education stuff I needed to basically take a next step in my business. Said to myself that based on that move, if I could at least triple what I earn from my 9 to 5 every month for 3 months straight, and I set myself a really big goal. I said, if I can triple my income for 3 months for back to back, then I'll hand in my notice. And 3 months in, I did it, and I was like, I'm gonna have to quit my job now. So to answer your question, yeah. So for like 2 years, I'd been thinking about it, but always kind of thought, nah, it's like a nice security to have that solid 9 to 5, all the benefits, etc., etc. And then in the last kind of like 6 months, when I asked them that question and they said no, I kind of makes you realize how little control you actually have over your own time, especially to be able to be there for your family. And that was kind of like I knew it already, right? It's all over Twitter. People talk about how you have no control over your time and your employer could drop you in a minute, and all of those kind of things that people say. But that was kind of I thought I had good flexibility and like really I great relationship with my manager, all really, really good guys. But not being given that flexibility was the thing that kind of clicked, and I was like, I need to do something about this.
Okay, so many interesting, fascinating things that you've just said in that little bit you were just speaking about. One, I went from my blood boiling because I just hate. I'm just, I like 9 to 5 jobs to a degree, and if you find great ones that you can be passionate about and whatever, and they're flexible and all the good things, people can't find those. But generally, I'm kind of anti 9 to 5 jobs because of many of the things you said. So I went from like blood boiling because how dare they tell you what you can and cannot do with your life if you're being a responsible, person, a good employee, whatever, to being like super fired up because like, way to go, man. Like, that is so cool that you had that realization, and then you set those goals, and then you hit those goals, and then you're like, and then, you're brave enough to go, all right, I'm going to actually do what I said I'm going to do. Goodbye. See you later.
Yeah.
Which I love. I love hearing those stories. Mine was a little bit similar in not with my 9 to 5, but my last job, which was my own business. But doing this whole online YouTube, Twitter thing, I kind of set the same goal. I was like, at the time, I think it was like, if I make $30,000 a month for like 3 months or something like that, then I know I had to shut my other business down. I'm going to go full force with this. And it happened. And I'm like, all right, well, there you go. That's the sign. It's wild when we set things like that and they happen. So let's backtrack. What were some of the big moments as you were kind of working that job with the new stuff, the social stuff, that what was one of the first moments that you're like, whoa, this could be something? Like, what was the first thing that happened like that?
The first thing that happened was right at the beginning of the journey, when I had started writing the blog, and I was trying to find out how to like put advertising onto it and stuff, and I think I made like a couple of cents literally, and I was like, this isn't gonna be something, and there needs to be something else. And I'd created a Twitter account purely just as an outlet for my blog post, so that it would automatically post to Twitter when I posted a new blog. Being very new to it, not realizing that I wasn't putting any energy into growing an audience on there. I was just posting blog links to no one, right? So, but through doing so, I got DM'd, as anyone on Twitter would know, is one of the many terrible and also great things about Twitter is all of the DMs that you get, especially kind of COVID time, right? So this was like very first lockdown time, and kind of money Twitter like blew up because all of these people were working from home all of a sudden, had all this time and were starting side hustles. And I got a DM from someone asking me if I was interested in learning how to grow my account and things like this. And I was like, Okay, fair enough. Yeah, maybe. That kind of went to his page, found all these other accounts that were also posting about it, and then kind of found all these other accounts that were also posting about like personal finance and investing and things. And I thought, wow, this is like a much better medium for me to share my knowledge and like track my progress through. So I'm going to do that instead. I bought a course on how to grow on Twitter and also how to write an ebook, and that was like $54. I've still got the receipt in my emails because I always like looking back at it and thinking that $54 investment took me to 3 years later quitting my job and launching my own business, which is crazy.
Which one was that?
The course,
Hmm.
it was uh, Twitter Cashflow by Hero Journey.
Okay.
I don't know
I've
if you're
seen that before.
familiar.
Cool.
Yeah, he's not really like around much anymore on there. I think he went into copywriting for a
Mm.
bit and then kind of fell off the grid. But yeah, it was a course by him, and yeah, so I basically turned a lot of my like blog posts and things like that, and then kind of compressed them into this like 7-step kind of process to achieve financial freedom or financial independence. So going through the whole process, and then I like attached my spreadsheet to it and things like that, and turned it into a product now, which is called the Financial Freedom Playbook, which I still sell. And
Has over 1,200 sales.
yes,
Congratulations.
thank you
Pretty
very
awesome.
much. Right, yeah, and I remember the first sale I made of that. I put like a tweet in my like on my pin tweet, just saying, I've gone from broken in debt to my net worth at the time was like far smaller than it was now, using this process. And I can't remember what I was selling for then, but it was a lot less. I think it was like £30, like $35 ish. And put it there thinking, try my luck, see what happens. And I was walking out of my door one day to go into the office, like one of the first kind of times that they opened the office up for us to go in during COVID. And my phone dinged, and if anyone's got the Gumroad app, it literally goes cha-ching when you make a sale. And I was like, what was that? Because I'd never heard it before. And I opened my phone, it was like, you made a sale of the Financial Freedom Playbook. I think at the time it was called like 7 Steps to Financial Freedom or something. And then I quickly realized that, oh God, what's his name? My man's having a complete blank. Huge like internet guru and like life coach for like presidents and stuff like that.
Oh,
Tony Robbins.
Tony
I
Robbins.
learned
Yeah.
that he had a book with the exact same name.
Oh, really?
Yeah, I had no idea. So I was like, I need to change that quickly before I get like sued or something. So yeah, it was called that originally, and yeah, so that was the moment for me where I was like, this could be something. I've made internet money. Like, this is crazy. Someone's paid me for my knowledge. And yeah, from then on, it just took a life of its own. Just continued being consistent, showing up every day, and yeah, like you say, 1,200 or so sales now.
So obviously I also share a lot of my journey online, my how much I'm making with certain things and net worth updates and whatever. And I have people who will DM me or on my YouTube videos comment, be like, oh, that must feel amazing to make 10,000 a month, 20,000, whatever the number is a month. And I'm like, yeah, it does. But I don't know if this is the same for you, but that first thing, that first like real moment that happened like that, my first time I sold something, the first time the AdSense rolled in, the first time I got a sponsor to say yes, that is kind of like an unbeatable feeling when you start doing this type of stuff. Is that the same for you?
Oh yeah, yeah. The first of everything is you're like, I was like levitating that day. Like yeah, the
I
thought
bet, yeah.
that like me, and I think everyone, unless you're super confident, has like some kind of imposter syndrome of like, why would anyone listen to me? There's like real experts out there who like know so much and have done this their whole lives. Like, why would they listen to me? But actually, like, if you're sharing your story, someone is going to relate to it, is what I've learned. And if they relate to you and you've got something that can help them, likelihood is they might buy it from you. And yeah, so when I made that sale, I was like, wow. It was, yeah, a real high. Like you say, yeah, like, now, doing what I do, it's amazing and it feels great. But yeah, nothing quite that first sale, that first thing is when you kind of realize, wow, this could be something, is a great feeling.
Plus the serendipity of it, you getting that as you're like headed to the office or
Yes.
walking in the office or whatever. It's like, maybe the universe is trying to tell me something here,
Yeah, 100%.
which
Yeah.
I love. So talk to me a bit about you. You've now officially, again, congratulations. That's super cool. You've officially left your 9 to 5 job. So you're doing this whole online thing full time now. You're in your first week of it. So what is that like? What do you do? If someone doesn't isn't familiar with you, like I know you from Twitter. I know you you have the site, the blog. I know you got some products. I know you some coaching. But like, walk if you're somebody who doesn't know these things, like I know a few of them. Walk me through what that business model is that you're doing.
Yeah, great question. So there's kind of like tiers to it essentially, right? So I run mainly my Twitter is like my main outlet. I've also got Instagram, TikTok, and I'm trying to work on YouTube, but it's like a whole new thing for me at the moment. So yeah, you can help me out with that.
Do it.
Yeah,
Happy to.
and yeah, essentially, so I started with ebooks. So I had like the Financial Freedom Playbook, a couple of kind of beginner's guide to like investing kind of books to help people get started around that kind of thing. And my like stock group, which is like a subscription where people get access to like my portfolio and things like that. And those are all doing great. And I was like making money from like, working with like brands and startups and things like that I actually liked and also enjoyed using, who wanted me to promote their brands. And so I kind of make money through that way. But the thing that kind of really launched me and the thing I knew I needed to do to go to that next level that would help me actually escape my 9 to 5 was like one-on-one coaching, like personalized coaching, because I had been selling the ebook for a long time at this point, and it's brilliant. It's helped a lot of people, and I've had amazing feedback from it. But I was finding that some people were getting a certain amount of the way through it, and then not getting any further. And for some of those people, it was because life just got busy, and they just didn't pick it up again, and they didn't have someone kind of nudging them to say, hey, you're still making progress. Where did you get to? Do you need some help? And for other people, they hit something in their journey that was like specific to their circumstances that the ebook can't cover, because obviously it can only cover so much without being a million pages long. And they just didn't know what to do next, and they didn't have someone that they could go to for that support to realign and get back on the wagon, so to speak. So I knew it was what I needed to do, both for my business growth, but also in order to actually help people as best as possible. And so now kind of the cornerstone like product is my Financial Freedom Academy, where I help people take control of their finances, whether that's eliminating their debts, escaping the paycheck to paycheck cycle, and ultimately building a plan to help them retire early, or a combination of all of those things generally. I build a plan to help people do that. So I put them through this like 5-phase process, which I've termed like the Financial Freedom Framework. And by the end of it, they graduate the academy like well on their way to financial freedom, essentially, having achieved their goals or having a solid plan in place to continue executing on to eventually achieve their goals.
Very cool. Is that coaching plus a course, or is it mostly coaching? Is there a community aspect? Like, what is it?
Yeah, exactly. Great question. So it's all of the above. So there is a video course. So there's like a series of detailed video lessons. There's like over 7 phases. So we're going right from, like budgeting basics. There's a budgeting boot camp. This is kind of where, like I was talking about earlier, like building that baseline and understanding what your current state is and the tools and everything you need to do that. Right through to mindset and habit changes around finance to make sure you're optimized as much as possible, right through to like asset allocations and structuring a portfolio and index funds and that kind of thing. So that's like the video course where people kind of educate themselves, and it's like literally step by step, and by the end of it they know what they need to do. And then there's like a road mapping exercise where I sit down with people, each individual, for 90 minutes to 2 hours, and we literally plan out their step-by-step plan for achieving their specific goals based on their circumstances. So we go through all of the motions, all the trial and error to figure out how they're going to get to those goals as fast as possible in the most like mathematically efficient way possible, but also, like we were talking about earlier, in a way that helps them sleep better at night, right? So it's based on their psychology, their appetite for risk and all of that kind of stuff, and their time horizon and everything, all that good stuff. And then finally, there's like a group element. So there's a Discord group where people have access to like a public chat channel. We have weekly group coaching calls where we go over specific topics. Like yesterday, we went over like credit card hacks. We've gone over high yield savings accounts, index funds, everything to basically help people make sure that they're making the most of their money month to month and making a bit extra where they can and things like that. And yeah, and then obviously they then also get 12 months of ongoing access to me. So rather than me doing like a one-on-one every week with every individual, which I think would be excessive, I always just say to them, like, you've got 12 months of ongoing access to me. The first kind of few exercises should be complete within the first 30 days. Once you've done that, you've got 11 months of ongoing access to me. You can fire me questions on anything whenever you want. If something needs realigning because your circumstances change, your income goes up or down, or life is bumpy, right? So whenever something changes, you come to me as many times as you need to get to grips with how to adjust things, so that when you graduate, you know how to pivot on this plan and you know what to adjust to see if you're still on track or off track, and what you need to do to get back on track if you are. So it's kind of like an all-encompassing, really kind of putting everything that I learned over 2 years and built over 2 years to try and get me out of the situation I was in and into the position I'm in today. And I'm giving that to people on day one and sticking with them for 12 months to help them kind of maximize their results.
Super cool. Okay, well, that's a very interesting kind of business model. That sounds like that's very all encompassing, which sounds very, very cool. So, what is that subscription based? Is that flat fee? Like, how does that work?
Yeah, flat fee. So it's like you sign up, you pay an enrollment fee, and then you're in for 12 months. The subscription model was like tricky with this because obviously they essentially get access to everything immediately, and if they complete those first few like actions, like their look back and their baseline phase, like within the first couple of weeks, then normally within like the third or fourth week they've got their roadmap. So like it's more of like an upfront, because it shows like a commitment both to themselves but also to me, that they're actually ready to take control of their finances and they're really committed to wanting to, retire early, pay off their debts and all of that kind of stuff. And then they're more likely to actually put in the work to get the results, I found.
Very cool. So, I'm going to go ahead and start closing us out here, but I do have one or two last kind of questions that I think would be a really good thing to kind of end on.
Sure.
Something you've said in this podcast quite a bit, you say on Twitter a lot. I use the same phrasing. I like this phrasing, and I want to explore it just a little bit more, which is escape your 9 to 5, or building the escape from your 9 to 5. Why do you use that phrasing? And then why do you think that's an important thing for people to do? And should most people think about building an escape from their 9 to 5?
I think so. Yeah. I think, you know, I don't hate on a 9 to 5 really like strongly anyway, but being in that position I was in where I felt like I had a really great job. I do still feel like I had a great job and I was very supported and things like that. But as soon as I wanted some flexibility, it was like, no, you don't actually have control. You don't have flexibility. You have flexibility within the bounds of our policies, and that's about it. So yeah, I think it's a really kind of honorable kind of pursuit that everyone should be in pursuit of, is to build something that is based on their goals and something they're passionate about, and something they can use particularly to help other people as well. If you've got a skill or a hobby or a passion that can help other people either learn how to do that same thing or to better their situation, then yeah, I think everyone should be trying to escape their 9 to 5 to do more of that.
Yeah. Worst case, you end up just bettering yourself financially, and you stay in your 9 to 5 job, and that seems like a pretty good case scenario. Best case, you actually find something you really love and you make all this money, and then you leave your job and you're more fulfilled, make more money than ever before. So it's kind of like, in my opinion, a win-win for most people to try to build that escape. And then if they use the escape pod, great. If they don't, but they're still, everything is better, great. It's like, I don't see the downside other than giving up some of your time, but I don't know. I think it's worth it.
Yeah, 100% agree.
And so, one last here question. So, for somebody who is who's hearing your story, they like this idea of building escape. Maybe they even like the idea of I'm going to build a small, like this little business on the side. Maybe I'll do something online like this. And then slowly build that up, and maybe one day that overtakes my 9 to 5, and I have that kind of new trajectory in my life. If there's somebody who's listening to this inspired by that story that you've done and wants to do the same, what is one or two of the things they can do right now today to just get that journey started, to building that thing outside of their work or whatever, that you found really helpful for yourself?
Yeah, it's a great question. I would say the first thing is just think about that next thing that you need to do to just get you closer to where you want to be. Because it can be really overwhelming to sit there and think, I want to escape my 9 to 5. Like, I'm going to quit this job that I'm dependent on to feed my family, right? That's like how on earth am I ever going to achieve that kind of thing? That's how I felt at the beginning. But what I did was just think, what's one thing I can do today that's just going to get me a bit closer to that? So for me, it was starting that blog. That was the first step. Just start writing, because people might want to listen. And some people did read the blog, but that led me to other opportunities, and those opportunities led me to others. So that's definitely one thing, is just think about that next thing you need to do, that small step you can take today, like right now, that's going to drive you closer to that. And the next thing is, you'll hear this a lot, but it's never be afraid to invest in the knowledge or the resources or the coaching you need to get you closer to a goal. Because I've invested thousands, probably close to I want to say probably around 7,000 or more, maybe 8,000 or more, like pounds, so like 10K dollars in the last 3 years, over time, in courses and education and the coaching that I needed to build what I've built. And every single time, without fail, it has paid itself off and then some. And maybe I've just been lucky, but if you take those resources and you research them to make sure they're decent and they're they're from people who know what they're talking about and have achieved what you want to achieve more specifically, then generally they're going to tell you exactly what you need to do. And if you take action, you will get those results. So yeah, just never be afraid to take that leap, bet on yourself, and then put in the work once you have invested in it. That's the most important thing. Great to read, but action is more important.
I love that. All those are great things. I have not regretted doing any of those things myself. So that's it. Thank you, Joe, so much for taking the time to chat with me. We've talked on Twitter, never talked well, this is not in person, but over the internet in person. So it was really cool to chat with you, and thanks for sharing all this stuff. I think this will be really helpful for a lot of people. But yeah, thanks, man, for being on the podcast. Appreciate it.
Really appreciate you having me on, Andy. It's been great fun. So yeah, appreciate it, man. Thank you.
Of course. All right, everybody. Thank you so much for listening. Bye-bye.